Thank you for joining us on Black Investments Matter. I'm Antoine Anderson, and today we're going to be doing terminology review. We're going to be reviewing some terms that are being tossed around in the financial sector, terms that you should be aware of and know what they mean. Term one is BRICS. BRICS is a new dollar decentralization or de-dollarization effort underway and being undertaken by the countries which make up its name. That's Brazil, Russia, India, China, and South Africa. Now, those countries are right now trading a lot of their commodities and all of their resources in US dollars. Their own economies, in many ways, suffer because of the dollar's dominance. When you're trading everything in dollars, your own economies, your rubles, your yens, your wons, your South African dollars, what have you, um, they're all having to pay a fee just to use dollars. And that is one of the things that they want to cut out. Um, that's a simplification of what this is, but what it really means is like nearly half of the planet's surface, habitable surface, is run by those 5 or 6 countries. And when you factor in the fact that it is projected to grow and encompass more countries, particularly leaving out the European nations and the United States, yeah, you can see not only are racial lines being drawn in the world's economy, but the overall way we do business is going to be affected. And that is one thing that the United States cannot afford at this critical time. Now, in addition to BRICS, the United States have also been hit with a downgrade of their credit rating from AAA to AA plus. The last time this happened, it was during a financial crisis following the housing market. Right now, it is strictly based on the dysfunction within our government houses, the House of Representatives and the Senate. And for that reason and that reason alone, the global economy, the global institutions, the IMF, and those agencies have downgraded our ability to make our payments. And it seems to be kind of timed right at the same time that BRICS is making a move to destabilize the dollar, pointing out all the problems in the United States. It's kind of hokey, but again, these are terms you need to be aware of, things you need to be aware of. And dollar decentralization and our credit rating being affected is going to cost us in the long run. All of these things contribute to inflation and the superinflation and hyperinflation that is to come once everything is settled. Now let's talk FedNow. FedNow is an instant payment settlement operation that's being spearheaded by the United States government. They want to take making those checks, those SSI checks, or those refund checks you get every year from your taxes. They want to settle those funds instantly, like they do with cryptocurrency and apps like Cash App and Zelle. Um, in so doing, there has been a little backlash from people who are afraid that that kind of overreach and to the private sector will spell bad news for the United States populace in general. But the issue of liquidity and the cost associated with doing traditional banking in this digital age is forcing the federal government to make some adjustments. People really like the fact that you can pay for something with Google Pay and it comes right out of your bank account without any hiccups. Uh, be aware of that and be aware of some of the arguments for and against it. Lastly, let's talk about inflation, what it actually is. Inflation basically represents the lack of buying power that our dollars have against the services and goods that we're trying to get. It means that the goods and services have costs associated that are rising faster than our dollars can accommodate for. What's never discussed in these discussions is what is driving those rises in price. Sometimes it can be something environmental, like the rise in the cost of gas. One of the last explanations given was that it was just too hot for the refineries to keep operating, and that led to increases. Or something is meaningless as the cost of chicken wings. Well, we had avian flu and that was caused it, but never in American history has everything gone up. Everything. And what is not always talked about is the business behind getting those services and products to your table or to the consumer. There is an expectations of shareholders in this country, and that is never discussed in any of these conversations. That 4 to 5% return every quarter that these investors sometimes want just outstrips the ability of the average consumer to pay. This is why we're having so many strikes in so many different areas of the country. This is why you are being put out on the street because there's just not enough money being given to the 1% to keep you in your house. It is extortion in a way. And for us to have a real conversation about the driving factors and what's driving up the cost, and this is from a layman here, this is just somebody just like you who are paying bills and don't know why everything has gotten so far out of whack in relations to what we're actually earning because our wages have not kept pace with what those expected prices and increases are showing us. If you have a few other terms that you want to talk about, please go ahead and drop them right there in the comment section. I'll be looking for your answers, but yeah, keep up on terminology, keep educating yourself, and I will talk to you very, very soon.